Hi, Mark Anderson here, mortgage banker with Paramount Bank. I am licensed to lend in all 50 states, and I would love the opportunity to earn your business. Please do feel free to call me or text me at any time. These have been some very, very busy times. I find myself pretty much getting started in the morning, let's say around 8 o'clock. I'll take a little break for lunch, a little break for dinner, and then it's right back to it. I was actually inputting loan applications last night until about midnight. So please don't be bashful about reaching out to me, even if it's after hours. Of course, certainly with a text, seriously, 24/7, please reach out to me. I'd love the opportunity to work with you. For today's mortgage rate update, we've got some basically good news overall. That good news is going to be tempered with a little bit of pessimism. But basically what we saw today is a continuation of the trend yesterday toward bond prices holding pretty well at this 104 plus level. This is a very, very nice bond price to see. We saw pricing this morning get, let's say, about that much better. This is a very technical way to put it. Some scenarios were a little bit better than they were the day before. Some scenarios were not. I would not characterize it as a dramatic improvement in pricing overall. But for one thing, at least we're holding still. I will say that this week has not been plagued with the day-to-day volatility and hour-to-hour volatility that we experienced last week, where I would talk to somebody in the morning and then have to basically update their rate for them in the afternoon because of the price changes. But what we've seen today is pretty good price improvements in the bonds. There's a little bit of a drop-off here around noon, but we're actually seeing more favorable bond prices here at the end of the day than what we had in the beginning of the day. I thought it would be interesting to take to put this into context. You know, these graphs sometimes can look very dramatic in terms of the up and down swings. It helps to actually take a look at a larger time frame. So if we look over a full month, you can actually see over here today, we're at a bond price of 104.25. That is among the highest levels that we have seen in this crazy rate dropping volatile environment. But you can see here we're not quite as good as we were in terms of the bond price here at the end of March. This period here around let's see, it looks like this was the 19th of March. That was a time where we were seeing really, really massive increases in mortgage rates to the point where it was really very concerning, just given how much worse they got from the best levels that were available just earlier in that month of March. But to get back to today, I'm going to basically state the same thing that I said yesterday, which is this. Mortgage investors, where these rates are actually coming from, they're very, very quick when bond prices fall to adjust rates to get worse. They're very, very quick on the trigger to raise rates if it looks like there's a reason to do so based on the bond prices. They are somewhat slow to make positive improvements in the prices based on the positive developments in the mortgage bond market, as you can see today. I do see some improvement in pricing pretty much across the board. Again, I would not characterize that improvement as particularly dramatic. So what does this mean for you if you have been maybe on the fence a while about refinancing? I hear all the time that, well, I think rates are going to get better. It's a possibility. We have to deal with these possibilities in terms of probability. And there is always going to be a possibility that rates could improve, particularly as we are in a good spot right now. But if there's any lesson that I'd like to put out there, maybe the central argument in a lot of these videos, is that the fundamentals that we used to be able to read to give us a pretty informed impression of where rates were going to go. Nobody has ever been in a position to say precisely what's going to happen day to day in the future. And the further you make predictions out, the less accurate those predictions are going to be. But it used to be, you could say with confidently, hey, the bond market had a good day today. That is almost certainly going to lead to enhanced pricing tomorrow morning. Or conversely, the bond market had a really bad day today. If you haven't locked in already, you need to lock in now. You used to be able to make those kinds of simple cause and effect predictions from a day-to-day standpoint. Given the sheer amount of variables involved that the mortgage investors are using to inform their position in terms of the mortgage rates, just given the sheer number of variables involved, anybody's predictive ability is going to be reduced due to the chaos associated with this entire situation. One of the things that I do suspect is leading to mortgage investors reluctant to sweeten their rate sheets when they see the bond prices go up, or at least to sweeten them as much as I think some people would expect, is one of the considerations they're dealing with. They're dealing with the potential of a lot of mortgage payments not coming in. That's definitely a factor. Their concern right now is probably not as much on the front end of the business in terms of getting new loans in the door. They already have a lot of new loans that have come in the door due to the unprecedented drop in rates that we saw in March, the unprecedented amount of applications that have gone in the front end of these operations. They've got to concern themselves with I have to imagine in their backroom meetings are much more important on the daily to-do list, which is how do we manage the fact that we're going to have a bunch of mortgage payments that aren't coming in. I know that we talk about these big banks as if they're these, they're so massive, they're so powerful, they've got so much money. But remember, 2008 was not that long ago from a historical perspective. We saw at that time how vulnerable a lot of these bigger institutions are. The fact that these forbearance programs are in place now, the fact that there are going to be a lot of people that are not going to make their mortgage payments, that does affect these mortgage investors, and it does affect them negatively in a pretty bad way. So I do think that may help to explain to some degree why we're not seeing that rapid drop in rates when we do see the bond prices at this level. So how does that inform your decision as a consumer? I would say if you like it, lock it. Because there's no guarantee of what's going to happen tomorrow, we're at very, very favorable rate levels right now. To hang your hat on the possibility of pricing getting better, certainly significantly better than where we're at right now, I just don't think is smart. Now, again, your decision is informed very much by what you have right now. Somebody that's sitting at a 3.5% on a 30-year fixed mortgage right now, well, you're talking about a situation where you don't really need to refinance. The savings are certainly less significant than somebody that has a 4 in front of their interest rate. I will say categorically, again, if you've got a 4 in front of your interest rate, just lock something in. These are very, very, very good rates. Very good rates. And there is no guarantee that they're going to stick around. We've seen this cycle happen over and over again over the last 30 days. Where the bond prices pick up steam, there's some improvements that are built into the rate sheet, and then they're gone, and the cycle continues. There is no guarantee that these rates will get better than they are right now. Now, if you are one of those folks sitting at a 3.5% rate, again, as I've said, set your target rate. Check with your loan officer on a daily basis. If that person's me, great. If it's somebody else, that's fine too. But find somebody that's willing to proactively keep you informed about what's going on in the market. You know, I've got a list of, I think I'm up to 20 people right now that I'm emailing essentially on a daily basis for whether or not we've hit that target rate. But I would strongly consider locking in whatever upside you've got. I sincerely appreciate you watching the video. Please do like the video and subscribe. I was told that I need to say that. I guess that's what the kids with millions of views on their YouTube channels do. So please like and subscribe the video. And also, please ask questions in the comments. I actually go in there on a daily basis, and I am answering people's comments and questions. And I'm actually thinking about maybe turning that into maybe a weekly series where I just answer certain questions on video. So again, thanks very much. Have a great day.